July 10th FinTech Market Report, 5 E-commerce infrastructure stories. Forward dated, Friday, July 10th, 2026. Disclaimer: news only, not legal, medical, financial, or official advice. Do not treat anecdotal stories as advice. Search engine metadata for today's e-commerce adjacent financial infrastructure news points toward 5 headline clusters: Treasury visibility, AI/cyber ERM, agentic and cross-border payments, RegTech compliance automation, and institutional trading connectivity. The trend signal is strongest around payments infrastructure and RegTech, with July 9th search results highlighting MasterCard's agentic payments pilot, Greece's Iris cross-border expansion, ECB T2 outage coverage, MECAR authorization stories, AML automation, cyber risk governance, and IPC's AI-enabled trading connectivity push. The papers. +3. 1. Corporate Treasury and Cash Flow Management. Treasury gets real-time vision, the cash flow blind spot e-commerce can't afford. Corporate Treasury is becoming the quiet control tower of e-commerce because the modern online seller is no longer just managing sales, it is managing payment holds, chargebacks, inventory deposits, refunds, FX exposure, supply chain timing, and cash trapped across platforms and bank accounts. Files July Treasury coverage says corporate growth is exposing cracks in Treasury infrastructure as cash spreads across more entities and banks, making visibility, forecasting, and control harder to maintain. For e-commerce-linked public market sectors, this matters because payment speed and working capital efficiency increasingly shape margins for marketplaces, logistics companies, software platforms, and merchant acquirers. The positive technology angle is that AI-driven treasury systems are moving from dashboard novelty to operational necessity, helping teams see liquidity in near real time and prepare for refunds, supplier payments, and seasonal demand surges before they become balance sheet stress. In a space colonialism frame, Treasury is starting to look like mission control for commerce. Every cash signal is telemetry, every settlement delay is oxygen drag, and every forecast improvement keeps the economic spacecraft stable. The market takeaway is not that every firm needs speculative tools, but that investors may increasingly reward companies that can turn messy payment flows into predictable liquidity. File. Legal subtopic. The legal pressure point is governance over cash visibility, payment authorization, and bank account control. If Treasury systems automate forecasting or payments, companies should document authority, audit trails, vendor risk, and fraud controls so the technology strengthens accountability instead of creating a new compliance blind spot. 2. Enterprise risk management. AI risk moves from IT problem to boardroom alarm, the new ERM frontier. Enterprise risk management is being reshaped by a collision of AI adoption, cyber exposure, and operational resilience, especially for e-commerce ecosystems that depend on cloud platforms, identity systems, APIs, and always-on payment processing. CISO Online's July 9th coverage highlights that lateral movement risk is rising as enterprises prioritize convenience over containment, leaving internal servers more reachable after compromise. While other July 9th security headlines point to AI gateways, autonomous cyber defense, and non-human identity governance as emerging enterprise concerns. For listed technology, payments, retail, and financial services companies, the risk story is no longer limited to whether systems go down. It now includes whether AI agents, identity permissions, and vendor integrations can be trusted under stress. A humanistic futurist view sees the upside. Stronger ERM can protect customers, workers, and small merchants from the kind of invisible infrastructure failure that turns a checkout button into a crisis. The stock market sector relevance is clear because cyber incidents, payment outages, authentication failures, and AI governance weaknesses can affect revenue continuity, reputational value, and regulatory scrutiny. If e-commerce is humanity's early training ground for off-world supply chains, then ERM is the habitat shield, boring when it works, existential when it fails. Soonline. Legal subtopic. The legal subpoint is duty of oversight. Boards and executives should treat AI security, identity access, incident response, third-party dependencies, and customer data protection as enterprise-level governance topics, not merely back-office IT checklists. 3. B2B payments and infrastructure FinTech. Agentic payments hit the checkout rail. The bots are starting to buy. B2B payments and e-commerce infrastructure are moving toward a world where AI agents, wallets, instant rails, and embedded payment tools transact across borders with less human friction. The paper's July 9th payments feed highlights MasterCard completing an agentic payments pilot in Moldova, Greece's Iris payment system expanding cross-border to Spain, Portugal, Italy, and Andorra. STC Pay adding MasterCard Click to Pay in Bahrain, Mali launching outbound payments, and PaySafe expanding integration with Tebex checkout. Those stories share a single market theme. Payment infrastructure is becoming programmable, geographic, and platform native, which is especially important for e-commerce merchants that sell internationally and need checkout conversion, payout speed, reconciliation, and fraud control to operate as one system. Search metadata also identifies agentic commerce, B2B payment modernization, stablecoin use cases, and payment orchestration as 2026 FinTech themes, with JP Morgan's FinTech Outlook describing money movement, B2B infrastructure, stablecoins, and agentic commerce as major areas of investor interest. The upside is people-centric. Faster supplier payments can help small businesses breathe, better checkout can reduce abandonment, and cleaner reconciliation can free finance teams from manual detective work. The space age analogy is that payments are becoming docking ports for digital trade, where every buyer, seller, bot, and bank needs a secure latch before cargo can move. The papers. JP Morgan. Legal subtopic. The legal issue is authorization and liability in agentic commerce. When AI agents initiate or assist transactions, merchants, banks, and platforms need clear records showing consent, authentication, dispute rights, refund obligations, and who is responsible if an automated purchase goes wrong. 4. RegTech compliance goes always on. AI watchdogs race the fraud economy. RegTech is having a high-velocity news day because financial firms are under pressure to prove that compliance is continuous, evidenced, and proportionate to risk, not a once-a-quarter binder exercise. FinTech Global's July 9th RegTech feed reports stories around Comply Exchange earning SOC 2 relevance as vendor scrutiny grows. Weak MiFID compliance findings from the Central Bank of Ireland review. CRF readiness concerns tied to customer data quality, Cord raising funding to fight AI fraud in regulated sectors, Tangos AI raising seed funding for financial crime investigations, and mounting AML stack pressure. RegTech Live also lists July 9th regulator items from ESMA and the FCA, including systemic cyber risk from frontier AI models, future retail payments infrastructure, illegal promotions and market abuse, and financial firms supporting EU carbon markets. For e-commerce and stock market sectors, this matters because compliance automation is now part of the infrastructure stack behind marketplaces, crypto platforms, payment processors, digital banks, lending tools, and cross-border sellers. The optimistic read is that RegTech can become a trust engine, giving honest businesses faster onboarding and giving customers safer access to digital finance. In the space colonialism metaphor, RegTech is the airlock. It does not stop exploration, but it makes sure the door opens without exposing everyone to vacuum. FinTech. RegTech. Legal subtopic. The legal subtopic is evidence quality, automated KYC, AML, sanctions, fraud, MiFID, tax, or crypto compliance systems should preserve explainable records, model change logs, customer data provenance, and escalation history so firms can demonstrate why a decision was made. 5. Institutional trading and market infrastructure. Trading desks go unlimited. AI connectivity becomes the new market rail. Institutional trading infrastructure is appearing in today's market metadata as a connectivity and interoperability story, not merely a speed story. IPC announced on July 9th that its one-call solution replaces a per-line, distance-based trading voice model with an unlimited per-user subscription. saying traders can connect to counterparties across regions without incremental charges and reducing connection times from weeks to minutes. The same announcement says one call provides access to IPC's global ecosystem of more than 100,000 traders across more than 6,000 locations, and customer adoption data showed a 55% increase in net active circuits and that 75% of clients increased net circuits after conversion. For institutional investors and public market infrastructure names, the signal is that market access is becoming more cloud-like, subscription-based, workflow-integrated, AI-adjacent, and designed for 24-hour global markets. That affects e-commerce indirectly but powerfully, because the same rails that price risk, hedge currencies, trade rates, and move institutional liquidity help determine the cost of capital behind retailers, logistics providers, payment firms, and platform companies. The hopeful technological lens is that better market infrastructure can create deeper liquidity and faster risk transfer, letting capital reach productive commerce instead of bottlenecking inside old communication models. In a lunar settlement economy, this would be the comms array between habitats. In today's markets, it is the counterparty network that keeps liquidity talking. Business Insider. Business Insider. Legal subtopic. The legal subpoint is communications compliance, as trading voice, messaging, AI workflows, and connectivity combine. Firms should preserve supervised communications, retention policies, surveillance controls, and evidence of best execution and market abuse monitoring. Video description. A forward-dated July 10, 2026 deep dive news report on 5 e-commerce connected financial infrastructure stories shaping the stock market sector, corporate treasury visibility, enterprise AI, and cyber risk, agentic B2B payments, RegTech compliance automation, and institutional trading connectivity. This episode tracks how cash flow systems, payment rails, AI governance, AML tools, and market infrastructure are becoming the backbone of digital commerce, with a grounded but hopeful futurist lens on how better financial technology can support businesses, protect people, and build the trust layer for tomorrow's economy. Video tags. FinTech 2026, e-commerce news, B2B payments, corporate treasury, cash flow management, enterprise risk management, ERM, RegTech, AML compliance, KYC